Hi everyone, welcome to my YouTube channel which is Explore Yourself, Banking and General Knowledge etc. Your next promotion is not just a step up in your career, it's a step closer to your dreams, your respect and your financial growth. The bank promotion exams 2025-2026 are your golden opportunity and I am here to make sure you grab it with both hands. In this journey, we'll learn smart strategies, master important topics, and tackle questions just like the exam demands. Remember, success does not come to those who wait, it comes to those who prepare. So let's start today. Prepare smartly and make your promotion in 2025-2026 a reality. Welcome to part 60 of my Path to the Corner Office 2025-2026 series, where we break down real bank promotion exam questions and give you clear, practical sample answers to help you climb the career ladder faster. Subject: Bank of India's outlook and lending norms for NBFC and NBFC MFIs. Question: What is the minimum sanctioning authority for all new NBFC accounts as well as for the enhancement or review of existing limits? Option A: Branch Manager. Option B: CAC. Option C: HLCC1. Option D: Board of Directors. Correct answer is option C: HLCC1. Still, according to the policy, the bank's exposure to a single NBFC should generally be within what percentage of its net assets or net advances? Option A 10%, option B 15%, option C 20%, option D 25%. Correct answer is option B 15%. Question: If the bank's exposure to an NBFC needs to exceed the standard 15% limit, what must be done? Option A: It is strictly prohibited. Option B: It must be treated as deviation and reported to RBI. Option C: The merits of the case must be justified in the proposal and it can be approved by the sanctioning authority. Option D: It requires a special waiver from the RBI. Correct answer is option C. The merits of the case must be justified in the proposal and it can be approved by the sanctioning authority. Question: What is the minimum net owned fund prescribed by the bank for an NBFC to avail credit facilities, even though RBI has withdrawn its minimum NOF requirement? Option A, rupees 2 crore. Option B, rupees 5 crore. Option C, rupees 10 crore. Option D, rupees 20 crore. Correct answer is option C, rupees 10 crore. Question: For an NBFC MFI registered in the northeastern region, what is the minimum NOF required as of the current policy? Option A, rupees 2 crore. Option B, rupees 5 crores. Option C, rupees 7 crores. Option D, rupees 10 crores. Correct answer is option B, rupees 5 crores. Question: What is the bank's benchmark for gross NPA for an NBFC MFI? Option A, 4% or below. Option B, 4.5% or below. Option C, 5% or below. Option D, 6% or below. Correct answer is option B, 4.5% or below. Question: What is the bank's benchmark for gross NPA for an NBFC other than MFI? Option A, 4% or below. Option B, 4.5% or below. Option C, 5% or below. Option D, 6% or below. Correct answer is option C, 5% or below. Question: The policy mandates obtaining a declaration from the borrower regarding compliance with which of the following frameworks? Option A, Basel IV framework. Option B, Large Exposure Framework. Option C, IFRS 9 Framework. Option D, FinTech Regulatory Framework. Correct answer is option B, Large Exposure Framework. Question. Which of the following NBFCs is identified by the RBI in the upper layer? Option A, Paytm Payments Bank. Option B, Bajaj Finance. Option C, HDFC Bank. Option D, ICICI Securities. Correct answer is option B, Bajaj Finance. Question. What is the minimum external credit rating ECR finally decided as eligible for NBFC borrowers? Option A, AA. Option B, A plus. Option C, A. Option D, triple B. Correct answer is option C, A. Question. Which of the following is a key guardrail put in place after lowering the eligible external credit rating from AA to A? Option A, reducing the minimum NOF requirement. Option B, restricting sanctioning power to HLCC 1 and above. Option C, allowing exposure up to 25% of AUM. Option D, removing the requirement for a credit rating. Correct answer is option B, restricting a sanctioning power to HLCC and above. Question. What must a branch do if an NBFC reaches its prudential liquidity limits? Option A, immediately recall the loan. Option B, comment on the number of breach instances in the last year within the proposal. Option C, ignore if it is rectified within a month. Option D, report it directly to the RBI. Correct answer is option B, comment on the number of breach instances in the last year within the proposal. Question. Which of the following is considered the primary security for lending to NBFCs? Option A, mortgage of property. Option B, pledge of gold. Option C, hypothecation of loan receivables. Option D, corporate guarantee of the parent. Correct answer is option C, hypothecation of loan receivables. Sin. An NBFC with an aggregate exposure from the banking system of more than rupees 100 crores, which was previously rated but becomes unrated, will attract a risk weight of option A 50%, option B 100%, option C 125%, option D 150%. Correct answer is option D 150%. Question. What is the risk weight for an exposure to an NBFC with a long-term credit rating of A? Option A 20%, option B 30%, option B 50%, option D 100%. Correct answer is option C 50%. Question. The policy document states that separate board approved lending norms are maintained for sectors where the bank's exposure is more than what percentage of gross global advances? Option A 0.5%, option B 2%, option C 5%, option D 10%. Correct answer is option C 5%. Which of the following entities is outside the purview of this lending policy document? Option A, housing finance companies, HFCs. Option B, non-banking financial company, account aggregator, NBFC AA. Option C, insurance companies. Option D, standalone primary dealers, SPDs. Correct answer is option C, insurance companies. Question. What is the entry level internal rating for an NBFC on the bank's scale of NBFC 1 to NBFC 10? Question A, option A, NBFC 1, option B, NBFC 2, option C, NBFC 3, option D, NBFC 4. Correct answer is option D, NBFC 4. Question. Which of the following is a specific risk highlighted for NBFCs that requires declaration on the robustness of their policy? Option A, forex exchange risk. Option B, cyber security risk. Option C, commodity price risk. Option D, supply chain risk. Correct answer is option B, cyber security risk. Question. The board directed that the exposure limit should be based on net assets or net advances instead of AUM because option A, AUM is always audited by the RBI. Option B, AUM includes securitized assets and may not reflect the actual asset position. Option C, net advances is a simpler calculation. Option D, AUM is not defined in the RBI Act. Correct answer is option B, AUM includes securitized assets and may not reflect the actual asset position. Question. For an NBFC to be eligible for a new application, it should have been in operation for at least option A 1 year, option B 2 years, option C 3 years, option D 5 years. Correct answer is option C 3 years. Question. The validity period of the reviewed outlook and lending norms policy for NBFC is option A 6 months, option B 1 year, option C 2 years, option D 3 years. Correct answer is option B 1 year. Question. Which committee cleared the memorandum for the reviewed policy before it was placed before the board? Option A. Only the control group. Option B. Only the credit risk management committee. Option C. Control group, credit risk management committee and risk management committee. Option D. Only the audit committee. Correct answer is option C. Control group, credit risk management committee and risk management committee. Question. What is the minimum CRAR Tier 1 plus Tier 2 benchmark set by the bank for an NBFC MFI? Option A 15%, option B 16%, option C 20%, option D 25%. Correct answer is option B 16%. Question. The policy instructs branches to incorporate which of the following checklist as an integral part of all eligible proposals? Option A KYC checklist, option B climate risk checklist, option C vendor management checklist, option D business continuity plan checklist. Correct answer is option B climate risk checklist. Question. The maximum limit on microfinance loans for NBFCs other than NBFC MFIs is capped at what percentage of their total assets? Option A 15%, option B 25%, option C 50%, option D 75%. Correct answer is option B 25%. Question. If an NBFC is placed under the PCA framework by the RBI, what is the bank's stipulated action regarding limit enhancement? Option A. Enhancement can be considered with board approval. Option B. No enhancement shall be considered. Option C. Enhancement is allowed up to 10% of the existing limit. Option D. Enhancement is allowed only for working capital needs. Correct answer is option B. No enhancement shall be considered. Question. The business of an account aggregator NBFC AA includes option A. Lending and investing on its own account. Option B. Accepting public deposits. Option C. Retrieving and presenting a customer's financial information. Option D. Underwriting insurance policies. Correct answer is option C. Retrieving and presenting a customer's financial information. Question. What is the primary method for assessment of limits for NBFCs as per the policy? Option A. Net working capital method. Option B. Turnover method. Option C. Cash flow method. Option D. Projected balance sheet method. Correct answer is option C, cash flow method. Question. Which of the following is a prohibited activity for which bank finance cannot be extended to NBFCs? Option A, on lending to agriculture. Option B, bills discounted arising from the sale of commercial vehicles. Option C, loans and advances by NBFCs to their group companies. Option D, factoring of receivables. Correct answer is option C, loans and advances by NBFCs to their group companies. Thank you very much for your patience. Request for like, subscribe and share.